Welcome to the Commercial Real Estate Podcast powered by First National. I am Adam Pwadik, sitting here with Aaron Cameron at the Western Canadian Apartment Investment Conference here in beautiful Vancouver. This is part of our speaker video series with Real Estate Forums. We have a returning guest, Katie Maslechko, CEO of the Rental Protection Fund. We did have Katie on a year ago, which may seem kind of recent to have a guest back on. However, there's been a lot of developments in her space. There's a lot to talk about. And even last time we had her on, within weeks, there was a bunch of new changes and it'd be great to talk to her about. And so we're going to capture it now. Katie, welcome back.
Thank you, guys. Glad to be back.
Katie's got a lot of speaking obligations today, not just the podcast. She's chairing the forum. So you probably have at least 10 different speaking engagements today. So thank you for squeezing in an 11th with us. And we do have a hard cutoff for your next one.
Yeah, you can't listen to this episode on 1.25 times. It'll be too quick.
Yeah.
We're going to rapid fire with Katie today.
No, this will be a lot of fun. So
where we left off last time with Katie was the Rental Protection Fund was relatively new at that point, getting some successful deals done, but the scope is growing quite a bit. I guess the geographic boundaries are potentially going to get a whole lot larger. Last time it's BC only, and now we'll get into it. But the idea is there's a federal level program in the mix. So maybe we'll start with how much has your program grown in the last year? I know you've seen some significant growth.
we have, certainly. I think probably last time we spoke, we were just about or just in the midst of closing our first few rounds of acquisitions at the start of last year. And within the last year, we've acquired just over 1,500 units across the province, everywhere from Vancouver to Port Hardy and Chilliwack to Fort St. John. So 1,500 units in basically less than a year, and with that we've deployed about half of our capital and also another 250 to 300 million in private lending alongside it to make these deals happen.
How big is it now? How big was it? Maybe just talk through the size and scope.
In terms of the equity we have, or
both.
Total scale? Yeah, so we were established with a $500 million initial investment from the province of BC. So that originally only had a 2,000 unit target on it. It technically still does, but fortunately through the efforts of all of the applicants, the partners and investors that have come in alongside them, and the hard work of my team, we've been able to stretch that even further than anticipated. So we're well on our way, of course, with 1,500 units to that 2,000 unit target, but with over half of the capital left. So now we're looking at how do we both stretch that even further, but also invest it in ways where it can, regenerate itself, and particularly in the current economic environment, kind of create a resilient capital base for the sector. It was at its core an investment in the sector, and we want to ensure it continues to be.
Maybe we should reference, you can always go back and listen to the first episode.
We just assumed everybody had listened to it.
Yeah,
It's our arrogance is on display here.
I assume everyone listens to every episode. In the previous episode, the first one with Katie, we would talk about your background and history and the foundation. Maybe just do a quick
elevator pitch.
Yeah, or mission statement for the fund.
Yeah, so we were established with that $500 million investment, and that serves to bridge the equity gap for nonprofits and those in the community housing sector. So it could be co-ops, land trusts, Indigenous housing providers as well, to acquire existing multifamily rental that is naturally affordable, usually due to its age or vintage, and help keep it affordable while also reestablishing a new long-term landlord and tenant relationship going forward, and really growing their capacity as well, not only operationally but financially. It's distinct from a lot of the other programs in certainly a few ways. One, that most often these tenants are the ones who are left behind by everything else. They don't make anywhere near enough to afford market rents, but they also make just a little bit too much to qualify for most subsidized housing programs out there. And similarly, the nonprofits, many of them, operate as many units as probably most of the private attendees, private sector companies represented at the conference today, but a lot of them are so heavily encumbered by operating agreements and other things that it limits their financial capacity more than it should. And so that really has our equity has a really transformative effect in that way that's already starting to
And what are the conditions of your equity?
So they have ongoing obligations over a 20-year term to maintain the affordability, although they can increase it according to the RTA, just like any other landlord, but also need to catch up on any outstanding capital projects that are often long overdue at that point, and we provide a renewal grant to help do that. And ensure that the building remains affordable and sustainably operated for at least 20 years to come under the terms of our agreement. So it's more than a grant with teeth, but a contribution agreement.
And what's the exit at the end of 20 years?
So at the end of 20 years, they own it without that restriction in place. Yeah. So many will continue to own it and operate it exactly as is. Over 20 years, some of those buildings will eventually reach the end of their useful life. And so they may also be able to rehouse those folks within their portfolio at units that are nearby and affordable to them, and then ultimately perhaps maybe redevelop those properties or infill opportunities as well, and really leverage that asset without displacing those folks in the traditional sense.
So when we last spoke, you're had just closed the first kind of handful of deals and looking to ramp up. I mean, obviously, if you've gotten to 1,500 in that time frame, I assume the process has gotten easier because this kind of equity, within a capital stack, because it has restrictions on it, can be a little more, I guess, cumbersome to put in place. But has the process gotten easier? Have you smoothed out the wrinkles? I mean, it sounds like you have, given the volume, but.
Yeah, we definitely, we were excited over kind of the last several months to really reset our process, not because it wasn't working, but just because we saw opportunities to make it even better and smoother for all involved. Because you're right, like the role we play in the capital stack and the overall acquisition is unique. We're not, at least not in these deals, the owner, but we are the equity. And often all of the equity and a significant percentage of that capital stack, more than equity typically would play in other assets. And so we really do enter into it and approach it as partners, which is often a shift for everyone. But in particular, the nonprofits that come in who are used to a very funder grantee relationship and are often disarmed when they realize that we're here to be partners in this with them, and we take the same approach with all of our lending partners, including those like First National, who play a critical role in this as well. But it's a different role to play, certainly, and we just felt there were a lot of ways we could streamline things even more than we already have and provide everyone the right amount of certainty at the right point in the process.
So at this pace, will you be through all your money this time next year?
There's a self-preservation here going on too, eh? All of a sudden, she's a little bit more selective on what deals.
Is this too successful?
Yeah.
Is this?
Yeah, well, it's an interesting notion and something that is just very top of mind and central to a lot of our conversations right now. Because, well, yes, arguably we could just spend through the rest of it and be gone. Have all the money gone a year from now, the money would be gone. And while it will have a dramatic, ripple impact across the sector in terms of the financial capacity for these nonprofits, it loses then its ability to, regenerate or recapitalize ourselves, so to speak. We're very much alive to the fact that we've seen great support from elected officials in the province. With all of our success over the last year, but there's also a very different economic environment right now, and And we want to ensure that no matter what their recapitalization solution may look like, that we're also positioning ourselves to self-sustain effectively, and find ways to do that. And one of the other reasons being that there is the federal fund, as you alluded to earlier. We can definitely get into that. That could take a little bit of time to get really going. And what we do want to be able to make sure is that we've got matching funds for those dollars in BC, so that we can maximize the dollars from the federal fund that would be matched here. And so ensuring that we have an ability to either regenerate or access that capital 6 months, a year from now. So it's a shift and an evolving model and evolution, but I think it's a critical one. This was fundamentally an investment in the community housing sector that the government made, and we want to ensure that it is exactly that it is not. We've never been just another granting program, and we don't intend to change and shift back to that in any way, and really invest this in a way that has longevity, especially given the current economic climate.
Well, maybe speak a little more on the federal program. Obviously, that would, if you go through the funds here, that would then give you a next stage in the journey, which is great.
Sure, yeah.
And in terms of, so you're bidding on that now? Is that the...
We are working with a number of other organizations across the country to do so, but obviously we have the kind of proof of concept. We've got a lot of the
only one too, right? Like,
arguably, yes.
Yeah.
To their credit, some of the maritime provinces have been making some really good progress on standing up their own or in the first few waves of their own acquisitions. But we really are the only kind of live proof of concept out there. And are, more than happy to leverage our resources and our learnings and all of that if it means that gets delivered at scale as soon as possible before these units are lost forever. And so that's kind of what brought us to the table there. And we're working with a kind of a coalition of organizations across the country, but also very much right now in kind of active coalition building or those who want to play a role in it, whether that is, vendors looking to sell their properties, nonprofits who would eventually be interested in pre-qualifying, or lending partners who want to help us to deliver this. That's kind of what we're working towards now. Is we've established a bit of a model and sourcing out those who want to play a role in delivering it.
How is it going to work? So the federal government has announced. What was the size of their investment?
So they have committed $1 billion in federal debt and $470 million in contributions.
So that would be the equity stack.
Equity component, exactly.
And are they proposing that it gets distributed equally or to different agencies like yourself, or is it they set up a new agency then deploys it across the country?
Their ideal scenario is actually to set it up very similarly to how we were set up here, so that it is, yes, it's government funds, but it is invested in an arm's length organization that is responsible for administering it, governing it, overseeing it, and dispersing it across the country. I think it's one of those key pieces. This is a lot of the modeling we've been getting into already, is figuring out what equitable distribution actually looks like.
The prioritization of projects would seem almost daunting. How much did you deploy in BC alone compared to 470 across the country?
In a year, we've deployed $250 million just in BC.
Yeah.
And so
470 seems like a drop in the bucket.
And
I get that there's $1 billion on the lending side, but I feel like the equity side is much more meaningful.
The equity is always going to be the limiting factor in these deals, absolutely. And so, that 470 can only go so far, and they do have a desire to see it renew basically at least once. So for that equity to last at least 10 years. So that will be an important factor. It needs to self-sustain itself a little bit. And it will be the limiting factor in that equation without a doubt. But you also have very different capital stacks depending on geography. We see that certainly in BC, and it's going to be even more extreme across the country. The loan to value in BC on these deals versus, Nunavut or the Maritimes somewhere are all very different. So that's a little bit of the model that we're getting into, and also figuring out where that stock exists. That was a really important metric that we continue to calibrate against even here in BC, is figuring out where this naturally occurring stock is located and distributed, and so that we can kind of track and calibrate against that as we make our investments. If, only 10% of the stock exists in Vancouver Island, for example, then overinvestment there doesn't necessarily mean the same thing as we've invested as much there as we have in the lower mainland. It's all relative.
Just delta to market rents? Like, no offense to the Maritimes, but their rents are rising, have been rising over the last number of years, but are still generally affordable compared to many other parts of the country. Using BC and Ontario as the examples,
you're advocating for a triage system.
Well, no, I'm just saying, like, I'm literally just thinking out loud here, but trying to identify the biggest bang for your buck would be the apartment buildings that have affordable rents. But if there were to be, those tenants being moved out, the prevailing rent in that market would be much, much higher. That delta is what you're trying to protect against, is it not?
We are, but it's also layered with kind of the threat of displacement, whether that is physical or economic, right? Whether it's due to the rent increase or physical displacement due to development.
So sites that are prime for redevelopment, perhaps, too?
Yeah, and that's why understanding where the stock physically is important, and that not all old stock is naturally affordable, and not all naturally affordable stock is actually kind of fits within this bandwidth. And it is a delicate balance, and all of those factors need to kind of play together to figure out where the stock is truly at risk, and how that's distributed across the country. Not just who has the oldest and most affordable stock, but where it is most at risk, and how it's distributed across the country. It's a bit of an art and a science.
Yeah.
And so as you can imagine, it's proven a really critical metric for us here in BC. And yes, scaling it up and analyzing it across the country is very different, but also exactly the same and critically important to making sure that it's equitably distributed, not just equally distributed.
Criticism of the fund is that you're preventing more units, right? Because you're buying sites that may have 50 units housed. It could be redeveloped into 150 units. And so therefore it's anti-supply, which is against the whole macroeconomic, debate. What do you say to that, to those criticisms?
I would say two things. One, I think it's a mindset shift in terms of who has the right to leverage assets. And previously, the community housing sector has not been given the right to leverage assets. And they can be equally, if not even more creative with how they do that as any other private sector actor. And I'm willing to bet and know many of them who are already working towards doing that and can increase supply without displacement due to the size of their portfolios. But what we also love to see and have even built out some really fantastic mapping tools that I can take no credit for. It's my fund delivery and data team that has built these out. But tools to help the nonprofits find the most strategic acquisitions possible to provide housing security while also increasing supply. So things like mapping where government-owned land is, or other opportunities that they could leverage, site coverage, things like that. So opportunities for infill. A couple of our acquisitions last year that really come to mind that we like seeing is one was acquired actually from CapREIT, and is adjacent to two municipally owned parcels. That nonprofit is already in conversations with the city to lease that land, build something brand new. They'll be able to build a tower there, move all those people over to a brand new unit on a weekend, not displacing them for 4 years and then hoping they come back, but moving them over on a weekend into a brand new home. And then ultimately they will be able to redevelop the property that they bought through us, now with 50% equity in that land as well. Or one that we helped acquire in Campbell River, 5 properties there that were acquired as part of a 9-property portfolio, and literally a football field size amount of land as part of that parcel that is completely nothing built on it. It's wide open and it's right next to the regional hospital, and they're already working on plans for infill on that property that won't displace anyone and will deliver much needed rental housing in a community that really does not have enough. So both things can be true at once.
To be clear, that wasn't my criticism. I was just giving Katie an opportunity to respond to the criticism that exists out in the marketplace. You've said it, but my reaction whenever I hear that is the displacement of the individuals that are in those units paying those rents. I mean, you can't dehumanize too much away from what's transpiring in the apartment market. I mean, that is the slippery slope that ends up with the financialization of housing criticism, is that we just look at it like dollars and cents and macro spreadsheets, when it really, you got to remember there are people that are living there.
There's alternatives
and that often, those with a lot of development potential, they're 6 stories now and they've already been rezoned to 30 stories. We're never going to be able to make sense of those values, right? It's just not a good investment of our dollar. And so those will not be
part of your program,
part of our program to begin with. We're the ones.
This is a quiz for Adam. What is it called when you take those tenants out and put them somewhere else? Do you remember? And then bring them back in.
I do remember this conversation. I don't remember the word.
It's a wine word.
Oh, I should know it then.
Yeah. If we were a radio host, I'd say text us at or call us in. The first answer gets Leafs tickets or something. So
what's the word?
Decanting.
Oh, yes, that's right. Yes.
Have you heard that before? It's decanting.
I have.
Okay, there you go. Come on, Adam. I was on the law.
Well, I know the wine version of it. But When you're looking at applications for you to participate in a project, how many no's are you handing out relative to the yeses here?
On the properties in particular, we're saying plenty of no's. That was a big part of the shift in our process, is ensuring that we were providing the voice that we needed to earlier on, so that both vendors, brokers, and the nonprofits could kind of cut to the chase that much faster. And if it's not a property that'll either fit our criteria, or it's just not competitive with other properties that are coming in at the same time, we'll tell them that right away, and then everyone can kind of either move on or readjust their pricing, versus it kind of just dawdled a little bit too long without our involvement in the prior iterations of our process. And so I think this has been really helpful for everybody.
It's like a pre-screening.
It's a pre-screen. We always had an element of a pre-screen, but there's a little bit more of a competitive element right now. So the pricing is either right when it comes in or it's not, and it simply won't advance if it's not there yet, versus kind of having to circle around that for much longer previously.
We're almost out of time.
I was about to say, we got to watch the clock.
Katie's got to run. She's got to run. It's
really
very
quick.
popular. Is there any messaging you'd like to get out? Anything you want to talk about as far as just next steps for you?
Yeah, well, I think for those who want to be a part of it or are looking to sell property or lend into the community housing sector or into affordable housing, please reach out about the federal fund, because we do intend on this being a coalition approach, and it's stronger together. So would encourage folks to reach out if that's of interest, and hopefully we can get that thing up and running, and government can get that money out the door. The joke I find myself making these days is right now we are are the only rental protection fund, and I hope very, very soon we are not. Although they maybe need some, more creative naming from the federal government with Canada Builds and Canada Rental Protection Fund. But if we
Doesn't roll off the tongue, I
it's
guess.
not
eh?
quite the same. But hopefully we're not the only one for long, and hopefully this is a solution that can start benefiting communities across the country. It's also a very, productive way to free up trapped capital in a very capital constrained market. And a lot of the larger groups who have, been vending properties that we have many times acquired through the Rental Protection Fund. That has been a source of lower cost capital for them to access. And that also has a circular effect. They can go and acquire or build new again in an environment where finding that capital is really, really tough. So, and we can keep our housing Canadian in the meantime.
Yeah.
Real estate forums are going to fire us if we don't get you to your next speaking obligations. Thank you so much for spending time with us today. Thanks to First National for powering the podcast. Real estate forums, we'll get her at the door right now, and we'll have you back in a year because this again. I feel like we're at the wrong time because you're just about to participate in a big change. So I guess it's a sign we have to have you back on. Thanks for coming on this time.
It's my pleasure. Sorry we have to cut it short. It's always fun time with you guys, and thanks to First National as well, who's continued to be a great partner in acquisitions along with many other lenders.
Thank you for saying that.